some back testing, another 2 weeks. This was today's data. Quite interesting, obviously. It's 7:30. So there was no trading today because it was public holiday, but you can see quite obviously base there. You're short right there on that blue candle. You could even take it on the prior blue candle if you wanted, but I prefer the second blue candle short right there, risking above there. So that you would, but it's a day without volume, so you rather risk at least 5. You won't have gotten your profit anyway, so it doesn't really matter. That is what the day was. Yeah. All right, let's go on back test. All right. How am I going there? 5, 6, no volume, 7. Monday, February 1st. Alright, so back come at 7:55, 8 o'clock. See, there's barely any short bullish volume. Kind of just came in though, so I'm not gonna be taking this trade short. I'll just watch. If price comes back up here, I want to see how price interacts there for a short. Otherwise, if price shows volume and pulls back down, we could take a long because the price did run up from here. Not that much, but that's why we're getting this bounce right here. Rejection. Nope. Go rejection again. Alright, so that's a short right there. I was thinking we could have taken the long on this black candle, but I don't know. Maybe. So at least 10. So this is low, so you want to use this low, so price that low is there. So at least 10, it's just, the might as well just use this, so 11. And you for 22. And if you're taking that, then this would have been a hedge versus this being your first trade. But assuming this is our first trade, then we have using this high, price that high is this candle here. So I want to do at least 10 because so at least 10. So 11, risking just above that high there. Prices showing some rejections in here. This ideally we want to see price come down here. So as I said, if you were in this here, if I was in this here, then I would get out of this short here. If I was not in this here, then I would probably get in long here at that black candle to hedge my short, because it makes this is kind of like a base. See the wick there is rejecting, very nice rejections. Makes sense. So I get in there using this low, but not prior to that using here. So I'll be willing to take 10% on that trade. And when this comes back up here, this candle was very bullish. Maybe you want to get out of your short there, because for it to come back up, it's likely that price wants to go to the upside. So these are the entries. I'm a little tired today, but still gotta work out today. Still gotta exercise today. Alright, so these are the entries so far. If you got in this long and got in this short, you could also, this could have been a second entry for your long. So could have been the same Same. Risking 11. Because this will now be break even, right? So you can risk 11 or maybe even risk the whole lower day. So 13.5, looking for 26. But yeah, so we have this already broke here. There's nothing though. Thing is, there's nothing. The price could really drop back down to this base here, or maybe it's high. So we'll see where price wants to go to. There you go. So it breaks up. 26 acquired. And if you are not taking this out, I probably will take it out on this candle, like I said. So if you're taking this out, that would have been a 40% trade. If you had not taken it out, then you'd have been a 30% trade because you lose 10% here. That's all it is. Or if you didn't add on to this, then well, it could have been a. If you didn't add on and you had the hedge already, could have been a 20 or 10% trade. If you didn't add on and you had just the short, then you could have broken even or a 10% loss. So the max loss on the whole day so far is 10% loss. Max profit so far on the day is actually more than 40% because you'd have this one which you would take your 10, you'd get your 20 here, and I don't see why you're quick to sell this one. So with this one, are you looking for 26, or either you're looking for 26 or you're looking for 22? So you could hold this and wait to see where price wants to start showing rejection from, because there's no. And remember, so right now this is the place where price could come to bounce off, and once price has gone above your thing, your TP is at 26. So if it's at 26, you want to put your stop loss at 26. The idea is you don't want to make at least your 2 hour. And if your TP is at 22, even better, you put your stop loss at 22, right? But I think it's probably going to be 26, so it would have been out there. I think it'll probably be 26, so we'll be out there, because anyhow you look at this, kind of like a base versus a low. A low is more low, you know. So that was good volume, but it's looking still bullish. This is a low here, this is a low now here. So let's see price break this low, and then we'll probably take it. I don't like this low. I don't like that low. I don't like that low. Price did come back to retest this lows there. Could have taken that long. There was time. 11:45. Taking the long here. Risking. If you're gonna use this low, then it had to have come here. So that's why this candle is better. So yeah, so risking at least 10 obviously. So right there. So just might as well risk under that candle there, which is best. It's 1 o'clock here, 1:10. And yeah, so it's end of day madness. So 140 anytime. 140, 145, 150. I just need a 55 candle. You might as well, the stupid 55 candle, man. Might as well just sell there. 155 would ruin you or make you. So 11, 10 you make 1 hour, right? Done. But you could have also just not even taken this trade. Like, it's not really a must, but it was a fair trade. Wasn't bad at all. Make 10%, risk 10%, make 10%. Not bad. Alright, next day. 5, 6, no volume, 7. As you can see, there is no bearish volume on the day. We do have some rejections, but there is no clear bearish volume on the day. We did have price drop from here though. On this day, dropped nastily. But there is no bearish volume on the day. I, for one, will be taking this trade. Risking this low here. probably going to the high. Oh, he broke it. Not bad. So our risk is here, 20. Yeah, we can't go and risk all the way there now. That's just crazy. That's just actually crazy. But yeah, so 20 just here. That's a good drop there. Good drop there. Good drop there. It looks like you'll have continuation to the downside, but I don't know. That was good volume, but there is no last 2 days. There's nothing, so I'm not going to use the like. It wasn't the cleanest, anyways. Like this wasn't the cleanest. It's not like it's a drop. It's traded down, so it's not. I'm not hungry to use it, kind of thing. Alright. 20. Do we get 20 to the top side? I think we are already at 20. Nice. That's 1 hour. It's only 9. Only 9. 15. We didn't really get any. I mean, I guess there was a base here though. This was a base, so this was a base here that had this consolidation, and then rally base, another base here, and then rise. So when you pull back, you can. Nah, there was no entry. There was this candle entry, but I'd rather not, honestly. I'd rather not. So just keep waiting. Price is trading very no volume at all. No volume. Break even obviously, but should we just take the 1 hour and leave? Because it's not good. Not good at all. So I think we take the 1 hour and leave because price is really fluctuating here. So take the 1 hour on the next candle here, and that's it. That's it for that trade. Make 10% done, because we may even get a short here versus lower highs right now, and more bearish volume coming in on the day too. So or maybe we hold this, and when we get a bearish opportunity, oh yeah, that's what we should be doing. When we get a bearish opportunity, a short opportunity, then we can go in short, and we'll probably not be able to make 2 hour on that short. That's 20% versus 10% that would have made on this. And so if we hedge the short, we can probably make 20% on this one, and so that would be 10% still on the day. So oh yeah, that's a better way to play that. So we're still holding, looking for that short opportunity. That's good there. Okay, I think that's where we enter hedge short right there. Hedge short right there. Risking 10. That's not the best, but if price does break that, then likely price will continue to the upside. So 10 looking for 20. Is end of day? Is it? Oh yeah, it's end of day. Oh, it's end of day. May not have entered that trade there. Didn't quite get 20 though. But at that point, we did not have 20 anymore for our. We're under 20. But this was 120. End of day. Yeah. We didn't get break even, but at least. Yeah. What's the only entry for the short we saw though? basically the only entry we saw. Could have forced this, I guess. So risking 10 and you get 20. But yeah, get whatever we get from these trades. Let's keep going. 4, 5, 6. No volume. 7. There's volume on both sides of the day, so. And now, let's see how price interacts down here for a long. And let's see how price interacts up here really for the short. So let's see if we get any short opportunities. Ideally, you don't risk at least 10, at least 5, obviously. So, but the range on the day is about 12. So yeah, at least 5. So from this point here, it's 5 for sure. There. And then using that, doesn't matter to use that high there. But we didn't get any entry here, so we're using here now. Just keep watching, I guess. Not a bad one. I think I'll take that long there. I know price had still wants to fall, it wants to drop from this area though. But we'll risk this low here. It's already broke this low. This low here and price at that. Start counting there, so 10. So I'll risk. Yeah. Close price was rejecting a lot in this area, so if it's not breaking, it looks like it wants to drop. Makes sense. Maybe given that knowledge, we should have just forced a short somewhere in here. But what if you wanted to break it, you just break it crazily, right? So we didn't really get any short opportunity. So I don't think it's best to force a short. Well, I guess we could have just maybe gone in short right there, risking the ultimate high that we had. So risking up here, 12. If prices went up there to break it, then so be it. At least we know that this whole thing here has broken. But otherwise, price was likely to come down. So if we went in for that, risking 12, you get for 24, which is down here. Next place price could jump off of would be this base right here, which is where price is right now. So let's see how price interacts. Good rejection. Good rejection. So you probably made your 24 here if you took profit. But I don't see a long entry. That's the thing. I don't see a long entry. So there's a base here. I don't really care about that base. So like I said, if you base off of, so there'll be a short here. But I'm not gonna put that because if we came back a couple of weeks from now to this day on our back testing, and we're like, oh, why do we get in short here? Would have to really understand. This is because this is fresh knowledge. But this long here, nah, no longs here. Paragon is ugly. So we'll wait. Now waiting for price to get up here ideally, but we'll see if price forms a short opportunity around here. base forming, breaks to the upside. I think I'll take that long. I think I'll take that long there. And the pullback to the base, risking, I guess it's the base there. Risking this candle. Because I'm waiting for price to get up here, right? So take that hedge there. There wasn't much bearish volume in there, but yeah, at least 5, and so risking this high. Because technically you want to risk higher there, so price that is this candle, right? So risking that there, so 6. So we get stopped out there, and on this one we're risking 11 or 12. I'm going for 24, which is all the way up here. Oh, that's not a good hedge. It's not the best. So I'd probably risk 10 on this. Since I'm in this trade, I'd probably risk 10 on this one. Risk 10 on this one. So we'll be up here. Might as well just risk that high. If price does go to break that high, then at least we know that. Because that's what this would have been risk for. So at least we know that if price goes to break that high, we'll be in profit for this one. From the base here, pulled back, but no entry. Pulled back again, but I'm not going to enter. Pull back to this here, no entry. So with this one, you're risking 12, 24. We didn't quite get 24 though. And there was the hedge here, so we didn't lose the short either. Who knows, I may have closed the shorts here, but we'll see. Because there wasn't really any bearish volume in all of these movements to the downside. There was a good entry here, but there was no bearish volumes in this movement. So I may have closed the short here because I believe price was going to break this high. Price breaks the high, I'm watching. There wasn't any real entry. Waiting for price to get there. Price got there. You could force this entry, but again, if you did take this entry, then if you moved it from here to this point now, you will just be a little bit. All you have to do is take that trade. So you already made about 20% on the day. So all you have to do is take this trade and risk right above your, so probably be 10, right? And that'll be above your 24 that you need to make on this long. So, and then so you're risking 10, looking to make 20. Obviously this long is break even, right? Looking to make 20, this long is already break even, just under the long. You have this low here that we don't care about. So you break even in long and gets sent right back, and price can be damn annoying. But yeah, anyways, so let's put it into, we have this here risking this candle here. So we'll risk that candle there. I said 12. Let's say 12 right here. So the thing will be 2R will be right there, right? And then if you took this short up there, then I would want to risk just above the take profit. So it could be like 9 or again maybe even 10, right? So there. If it was 9, however, I don't think we take profit even if it's 9. Almost. Well, yeah, I'd say 10. So now price has come, stopped us out break even here, like retards. Kind of annoying, very annoying, honestly. End of day. Oh, end of day madness, man. 155 is right here, so we close all our trades here anyway. So this will have closed there, and this will have closed there. So break even on this and take the profit on that. I didn't even know it was end of day. Anyways, that would have been like almost, so probably 15% gain on this plus a 20%. If you took this trade, that'd been 20% plus 15. That's 30%. That's 35%. And then you'd have. That's about it. However, if you took this trade here, if you didn't take this trade, then it's having a loss minus 10%. You take this trade, break even. You take this trade plus 15%. So that's probably break even in there. If you took this trade, loss, took this trade, you're in the trade. If you took this hedge here and you didn't fail, you didn't get out long, or you didn't get out of the trade, and also you risk probably just that 6, right? If you risk also that 6, which is I don't know, I don't know why I didn't say at least 10, but anyways, let's say you risk that 6, then and then what's it called? You would have lost this trade if you didn't get out here. So that would have been 10% loss, 10% loss. That's what's it called? 20% loss, right? And then so now you're up at this point here. You're up 16% on this trade. Not 16%. You reached 11, so you're up probably 15% on this trade, right? And you're already down 20%. So now you hedge your trade here. So now you can only make 10% on the day, which will bring your total loss down to basically about 10 to 15%, or 10 to 12%. And so you took this trade. Lucky for you, you get a good 17% almost on a day here. So you basically bring your total loss on a day back down to about 5%. And so that's still not bad. So the worst case scenario on all of these trades is a 5% loss on a day. Best case scenario is a 40% or 35, between 35 to 40% gain on a day. So there you go, not bad. 6, no volume. 7. Is it Thursday? Nice. Alright, so as you can see, there's a little bit of bearish volume, but not much at all. I don't like this candle like that though. If there's no bearish volume, there should be no bearish volume. There shouldn't be candles like this. So I don't like that candle, and I'm not gonna just jump in this trade now. If we're gonna jump in trade, it'd be that black candle, but let's not do it. Let's not do it. Price has pulled back to this, whatever this is here. But we will prefer for price to come down to this area. This 730, so 730. So come down to this area here. Forming some kind of base there. Not bad at all. It's only been one entry I've seen so far in the day. I know there was a base here, but it's not the type of base we like. So I just didn't call it out. But there's only been one entry I've seen on the day so far. I like this low. It's from not a bad entry here too though, actually. It's a particular black candle here. 1340. You probably want to just get out of the trade right there because holy, I guess you should wait for 50. Well, yeah, sometimes 55 does you good, sometimes 55 does you wrong. So you just maybe you just put your stop loss always at the bottom of the 50 candle, at the bottom of the 150 candle, because sometimes it will do you wrong. So the trades that I found today were one was, if you can find it, but one was this here. One was this here, sorry. Because we know this was a base, but when it formed this base and then this kind of happened, looking like it was going to break to the top side, that was when we like, okay, we take that. And wait a second. Take that, and the risk will be, so we know this is the base. We don't really like this base, to be honest, so we'd have to risk end of day, to be honest. So have to risk just right there, 13. Looking for 26, which we still don't get to the end of the day. So that was first entry. Second entry would be on this candle here. That was the only two. So for this one, this was the base, and we'll be risking. We know that this is break even though it's, so we're risking at least 10. Just risk down there. 10, looking for 20. Right, that's all. Those are the two entries we had on the day. So the same price was respecting this base, and the same price was respecting this base, and there wasn't much bearish. At this point, there was some bearish volume, but there wasn't much anything. But yeah, so those are the only two entries, and none of them took profit as in 20%, but combined, you probably made 30% on the day if you waited for this candle to sell. If you sold here, you probably made 20% on the day, maybe, or less, maybe. So risking 13 here. If you sold at 140, you made, I probably sell at 13, so that's 10%, and then risking 10 here, and then selling here again. So about 17% on the day. Yeah. Go to 1 hour. Let's keep going. 4, 5, 6, 7. There is not much bullish volume on the day, to be honest. Not much bullish volume. Yeah, not much bullish volume. So we're not gonna take trades off the bottom. We're not gonna take trades off the bottom. It does look good, but not much bullish volume. We'll have to wait and see bullish volume come into the day. Now bullish volume has come into the day. So we're waiting for price, see how price behaves in this base here. It's rejecting nicely though. But this base, it's not the best. So honestly, kind of want to see how price interacts up here. It looks bullish. Okay, did it break? Nope. So it does look bullish. It does look like it's gonna break, but if it starts to drop, it won't be pretty. So risking up there. So at least 5. That's it. Break even now, because if price comes, there was no real entry for a long for a hedge, but if price goes so close to 10, but if price comes, it likely take us out and continue going up. So break even on this trade. Annoying as it may be, because this volume happened, price came, and then this volume, hell no, Break even, baby. Oh hell no. To the no, no, no. Hell to the no. To the no, no, no. But yeah, break even here. There is this base here. Let's see if price pulls back to retest that base. Price is finding it tough to break out of these highs here. It's quite the bearish volume coming in. We know one price come interact here, so we're gonna take this short. I'm gonna take this short right there. Risking at least 5, so risking higher day plus 4, so 8. Or just put it as 10, whatever. Because we do have 20 on the, like if we come all the way down, we can make 20. I guess higher day plus 4, so 8. Put it as 8, maybe as 8 or 9. We haven't gotten good entry yet. Nope. There you go. Good. Not the best. We want to see how price interacts at this week here. But it's looking like it doesn't want to get down there. But whatever, there's a base up here. Let's see how price interacts up there. So we haven't gotten there yet. There you go. We get there. Prior candle wasn't the best. Another rejection. Nice. So add there. What's the time? 12:30. Add there. Our risk is obviously top of that black candle there. So that's 5 exactly. Price has come down here. That was a very nice rejection. Very nice rejection here at 12.50. I don't see why we're not taking a trade there. Prior candle did have a little bit of rejection too. So we'll take a hedge there because we're risking this low. So prior to that low, at least 5. So I'll do it there. But if we do get stopped out, at the very least, we'll probably make one. Probably not make any of these, but you know. End of day madness, 12:30. Get out the long. I say we get out the long break even. Get out long break even. 12:40. Where are you planning to go? Put this as break even. So it's now 12:50. Put these as break even already. And that's it. That is it. Oh, annoying. So well on the day there was nothing made break even day. Break even indeed. Alright. Alright, let's go to Friday. I think this day was Friday, right? Yeah. Alright, one more week of this until Monday to Friday again, and we're done with this back testing, and we'll start trading tomorrow morning. I mean, I'll probably come back and back test again later tonight, but yeah, trading is tomorrow morning, baby. Trading is tomorrow morning. 5, 6, no volume, 7. Coming in at 8. We see that, what's it called? There's volume on both ends, about the same amount of volume on both ends. Price already broke this high, so we're not going to get in short there. Let's see how price interacts down here for a long. So it's the only thing we have really. Nice rejections. So why did price come down? He didn't give us an entry. He didn't give us an entry. So nice coming back down. Yeah, I guess we're just getting there. guess we'll just get in there. Risk will be obviously this low because price came to retest the low. So obviously this low, but prior to that low, at least 5. So might as well just raise down here, so 5.5. And there we go, we get stopped out. Like I said, there was, for some reason, price is not passing this high here. It barely went above it, barely went above it. Same thing happened yesterday, that's why we went in short, right? Price was barely going above. Anyhow, there was no short opportunity, so we thought, maybe let's take this long. We got this trade. So we're down 10% on the day, that's fine. That is all good. We really did expect price to continue, but price just rejects off of that high. Very good bearish volume though. We do have bullish volume on the day, so we're not afraid to take some trades from the bottom. We're not afraid to take reversal trades basically. So coming in here, this is nice rejection. It's actually pretty nice. Here will be best though. Here will be best. But this is actually good for good consolidation there too. So I'll take that trade there. And I will be risking first of all at least 5. So let's see where 5 is. I think it's perfect. Risk there. And again, we're waiting for price to come down here too. So where our stop loss is basically. So we can take another trade. There you go. That's another trade there. Another trade here, risking low of the day. This is the base, so below that there. But again, at least 5, right? So 5 is right here. There's a base here. Obviously, you want to see how price behaves at this base. 10 is there. I'd have to. There was this candle. Prior candle was trash. This candle, prior candle was good, but I'd have to wait for another candle. There you go. We break through, so there's no hedge here. But on that base right here, so let's see how price interacts at that base. It's not giving us any short entry yet, so we'll have to wait. Looks like it's come to bounce off of this base that it formed here. As a matter of fact, I don't see why we're not adding to this trade here. And the risk is, well, all the way down here. 5.5. Nice rejection. Oof. Nice rejection there. This particular candle was nice. This candle just solidified it. Price is obviously harassing us today, but it's fine. Given this candle, I'd say we get out of this long here. We're still holding this long. This long is break even already, but at this point it became break even. But this long, we'll get our break even on that one. So that's break even on that long. I want to see how price interacts up here for a head short. One o'clock is approaching. This is 1 o'clock, right? 12:55. So obviously, if you're in this long, you didn't get stopped out. Like, we just get out just because you never know what price wants to do. And so on this one, we're risking what was it, 5? I believe 5. So we're looking for 10 on this one. Basically out here. So that's it on that one. If you still, nerves of steel, holding this one 5.5, looking for 11, yeah, you probably won't be getting that. But end of day is happening. End of day can be fully mad. So we don't want to see those start. There you go. So end of day could run mad. So there's this. If you are in this trade still, just put it as break even. If not, you are not in any trades, right? So don't stress it. Because that's why I say put it as break even. Don't. I know some people want to close the trade there, but end of day can be crazy. You can see right here. So you would have literally made your money if you held your trade. So what, risking 5.5, looking for 11, right? So TP right there. End of day, baby. Alright, as for these two trades, this one, yeah, sure, sure. This one, however, it's not like I won't take a trade. I'd likely take a trade, but I'm likely to risk down here. Especially, I'm likely to risk down here, especially if I lost this trade. If I took this trade and I lost this trade, very, very likely to be more conservative on my next trade. That's just how life is. So if I took this trade and I lost this trade, very likely. However, knowing that price is not going much from these highs and it's rejecting a lot, we'll probably be looking for a short opportunity and may not even get in long. So this may have been our first trade. If this was our first trade, it could have also been very conservative because you never know. So 5 is down here, yes, right? And what's it called? I could just be like, sure, I'll just risk down here. That's something I could definitely do. 5 is already here. I might as well just risk here. 7, okay. That's just something that I definitely could do. If I did that, I could get in again because we were waiting for price to get down here as much as we're waiting for price to get down here. So if you want me to give you a visual representation, it will be something like this. This is the base that we're waiting for price. It did get into that base, and then that's that first base, and then the second base would be this one here, this one here. Right, so we got in on that base and risking outside of the base. And for this base, it was a little weird, honestly, but it's still fine. Maybe if we adjusted the base and made it just this here, maybe we would have had to wait. Maybe we would have taken a trade down here. If we took a trade down here on this particular candle, because the prior candle wasn't bad, took a trade down there, then 5 would have been outside of this. And so if we now had 2 longs, one here, then add in here, even though you close this trade. So if you added your long here again, and you had one here, at this point when you wanted to close this one, you could have, because you already have 2, or you could have I don't know, because this is still the only one that's break even after this move. Then you had this one and this one. This is just a Monday. Then you have this one and this one. And then this one. If you decide to break even on this one, well, you still have 2, and that's fine, right? Because this is, I guess, at this point, before this drop, you're already breaking even on this, so you're only risking 20% still on the day. And then price starts to move back up. If you decide to close one, then you're only risking 10%. If I already had this, I probably will close this one. If I did not have this, then I may be hesitant to close this one because it's already breaking, so I'm technically only risking 10%, right? So 10% risk on your trade is not a bad idea. And so we end up. So if we had all 3, however, well, good for you, innit? So 5 looking for 10. You end up getting 10 here, but you hold that one and you probably won't get 20, right? 17. So instead of making 20%, you make 37%, right? And then on this one over here, so probably would want to hold the lower one because we're also risking 5 here, and this one we're risking, I think it was 5.5. So first of all, try to close this one, or close one of these 2 first. So it'll probably be this one, not the low, so we'll probably close 10 here for that one, and then hold the lower one, and that one will probably get 20%, which is beautiful. And then on this one, which is the third one, we'll close this one too at our 11. Close that one 11. So it will be 20, 20, that's 40%, and then make 40% on this one, so that's 80% on the day. Well, these are all the entries. I guess there's one more entry here if you want to count this entry. But there was not really any short entries on the day. So we've not seen that for a while, but yeah, there wasn't any short entries. There was the places where there could have been short entries when price was coming back up to. So this base here, you could argue, oh well, there's a short entry here. I'd argue not. And if you did take that entry there, you would be risking 5, which is 5 is all the way up here. You won't have gotten stopped out, and to be to your own benefit that you close that short there on the pullback to this base. So remember, this was the only point at the whole trading that I thought there was an okay short, but I would have preferred to wait for one more count just because there was no volume on this, and there was no volume on this either. I don't know, it just didn't feel right, I guess, is what I'm getting at. It just didn't feel right. But if you wanted there really was no volume on either of these candles. So, and there was volume coming up, right? So that was what spooked me, I guess. But if you did take a shot on this candle, because there were 2 candle rejections, then you won't have gotten stopped at. I hope so, but it's all due to all pain on spread. You would likely have not gotten stopped at. If you did not get stopped at, then it's to your own benefit that you get out of your short right here as break even, and then you'll be entering your long right there, and then you'd get out of. So same thing, you wouldn't have lost on your short. The only points where you'd have lost were on this trade and this trade, if you took this trade, 1, 2, if you didn't risk properly on this trade. So let's say you lost 20% on the day, and let's say you lost. So if you took this loss, you probably won't take this trade. So then you have this long and this long. If you held both, you'd have made what's it called, 20% on this one. So you lost 20%, you make 20% on this, right? So that's 10R. And then on this other one, if you held it, right, you would have made another 20% on that, which would have brought you up to about 15% on a day in profit. But given that this happened while you were in these 2 trades, you would have been unlikely to hold this one. So you would have only been break even on a day. So the worst case scenario on this whole day is that you end up down 20% half the day, and you are a little bit nervous, and then you make 20% back to be break even. So worst case scenario is you're break even on the day, and then after that, best case scenario is you're up about 80% on the day. So worst case scenario is you make and lose nothing on the day. Best case scenario is you're up about 80% on the day, and we already did the calculations for how it would be. 80% is assuming you were in these 3 trades and you held all 3, and you manage your trades properly by closing the right ones at the right times, and what's it called, knowing that end of day madness occurs. So you waited for that end of day madness and you took advantage of it, right? So that would have been these 3 trades to give you 80%, and all you'd have taken this trade. So 1, 2, 3 trades to give you basically, actually, if it was just 1, 2, 3 trades and you close this one early, it would actually be probably, you'll be down 5% on the day versus break even, because after losing this trade, you take this trade. After losing this trade, you take this trade. So it's a compounded thing. So you would have probably be down 5% on the day, or maybe you're down 7% on the day. So worst case scenario is you're actually down 7% on the day, technically, and then best case scenario is you're up. You're up. Actually, if you're technically you're up more than 80%, which would probably be like over 100% if you're looking at it in that perspective. So let's just say worst case scenario 0, best case scenario 80%, just to be simple. I guess that's about it. So there was that trade there. Whatever. Alright, let's go to next day. 4, 5, 6, no volume, 7. Alright, so coming in today, there's a little bit of bearish volume, but not much on the day. Not much at all. And we know that price is kind of feeling bullish. But ignoring that, we know that there's a lot of places price could drop from on the day. And the price is not shy to bearish volume on the day right now. So let's wait and see how price interacts up here. This is not a bad short though. This right here is not a bad short, but let's just wait. So price is interesting right now, I guess. Quite interesting. I saw this blue candle there. I was like, it didn't really reach, but it's calling my name. Well, let's see what the range is for today. I still are risking from up there. So at least we are always at least 5. So if we did take this trade, honestly, it wouldn't have been bad if you took the trade because just solely because, okay, not solely because there was the fact that it did look very bearish, but also because if you were going to risk, you might as well just risk 6, which is way above all of these highs, right? So like you just be in the trade, just chilling because price is not shy to bearish volume. She had one here, had a little bit there, and so if you took this trade here at that blue candle where I paused for a good amount of time contemplating, if you took that trade there, I didn't really, if I had checked the range, then I would have said we should take the trade there. But yeah, knowing there's that range, there's the trade there, 6, risking 6. Because if you do lose this trade, at the very least, price would have formed some kind of structure or prices that form some kind of direction if you lose this trade. So it's more like taking a trade to to kind of be in a trade alongside the market, basically. It's kind of using your trade to test or using your trade to go with price wherever price wants to go. Whether you lose the trade or you this particular trade, going into this kind of trades is you're not really expecting to like it's because as you can see there is more bullish volume than bearish volume, and you are now going on a short trade because well there was a lot of points where price rejected from here, and now we're risking all the highs. So if price does go and break the highs, then it's likely that price will pull back and give you an opportunity to go in long because prices are probably formed, as you can see, it's forming bases structure as it's going up. So otherwise, if price goes down, then well, you profit. That's all it is. Because you can't predict things like this. You can't predict things like that. And price then, I guess this blue candle too is another entry because prior candle was rejecting. Blue candle is another entry. But if you look at the broad scenario, there is a base forming there. So what if it went down and then came back up, right? So that's why you'll be hesitant to get in at this point. If it was somewhere here, then sure, you don't even know that a base is going to form. But here, it looks like a base is forming, right? So you may be hesitant to get in. So that's why if we got in here, we didn't even know a base was going to form here. We know something formed here, but it's very ugly. So we're not exactly scared of that one. But yeah, let's just keep going. So at this point now, we're looking for want to see how price interacts down here at these wicks, because that's where price pushed up from. And after that, want to see how price interacts down here at these wicks. And that is good. And that's the low there, and prior candle is there at least 5. So we could hedge here because price does have a lot more bullish volume than bearish. If at least 5 is down here, might as well just risk down here. So we'll just take that trade, risking, I think it was 8. So risking 8 there. And yeah, risking 8 there. So I want to see how price interacts at this. That's good rejection. We didn't get an entry. That's good rejection. So we'll take this trade here now, risking 5. Again, and this is going to be lower. And hey, we're already in this trade risking, I believe it was 6, right? So if we get 12, if we get stopped out on this trade that we're entering right now, if we get actually on both, if we get stopped out, then we'll basically be break even on the day, right? And that's fine. But if price comes back up, we can probably close this trade if depending on how price trades as it's going back up, and then because next we're looking for price come to this. There was a base here, but there was no break of structure to the upside within the base. So I don't really like that base for the show. But there is something here. So we want to see how price interacts here and then see how price interacts here. But here is not. If you want to see how price interacts, but we're not going to take a trade off here. But here for sure, around here for sure. So this we're risking 5, right? So here we're risking 5. So 5 is under. Like we said, if we lose the trade, then oh well, if we lose the two longs, we make 0 on the day. But if price starts to come back up, then we're obviously break even on the short now. So we just hold. Right? We just hold. See price interacting weirdly here, but we don't care. We have a low here. We don't want to take a trade off of here. I want to see how price interacts up here because this base, I guess, it's kind of aligned to this whole area here. Whatever. It's not interacting the best, but I don't want to take a trade off of that. So price has now touched this. Now we can take another hedge here. We already break even. On this short, right? So we'll now take another hedge there for our, and then we'll just risk up there. So about 7. And we're in this trade risking 5. We're looking for 10 on this one. 10 is about here. So we get out of this trade before we even get out of that one. So we can even decide to close everything and be up on a day, holding this one, close this, sorry, not close it, close this long, right? Profit, and then close, this was already break even, and then close this short here and hold it long only, and then leave it long as break even, if we decided that. But let's see how price trades. Looking good, actually, looking very good. So we're now break even on that trade. If price pulls back, we're going to get our break even on this short. We didn't get a pullback. We got our TP on this one. Should we close? We already got to break even TP. That's 20% on the day. So if we'll just leave this trade. If we lose this too, if we whatever we, damn, damn, the stuttering is crazy. Calm down, buddy. Whatever we whichever one we lose, would likely take profit on the other, given that that's the case. Because this one we're risking, I believe it was 8. This one we're risking 8. So given that that's the case, so 8 looking for 16. 16 will be, oh my god. If we lose this, we may have to close the long early. If we have to lose the short, because we're waiting for us to try and get our break even on the short right now. So if we get our break even, good for us. If not, we may have to close it long early. Time here is 11:10. I say we're getting another long here. Getting another long here. So there's this low here. So we're risking at least 5 first of all. So down here is perfect. So we'll just risk down there. So 6. And just break even here. New long. We're still holding this short. We'll go out break even on the short. And then now we're just risking 10% on the long. But if yeah, it's fine. Maybe we should have not even gotten in on this long. We should have just waited. But there was no entry. I guess there was an entry. Maybe. But definitely break even on the short. But now we're in this long, in a drawdown there. Kind of annoying. But we're still in profit. So if we do lose 10%, then we just call it a day making. So, but now it's not just a straight up loss 10%. It's just a straight up loss 10%. It's kind of annoying, to be honest. Maybe we should have waited for this candle come down a little, like into this base, because there was a base formed here. Maybe we should have waited for that base, so the trade would have been on that candle instead, and then which would have been better, because now we would have taken it down here or down here, and we would have been risking 5. So we could have just risked down here 7, right? But whatever. So I guess that was the other entry, but let me just put that line there for future references. That would have been the other entry at that black candle using this base instead of, I kind of use this base up here, which is redundant. I don't know how they do that. It was this base I'm supposed to use, but anyways. So we're out of this short break even. We already made 20% on the day on this long. We're still in this long. We haven't broken it. We're breaking on this long, but we haven't been stopped out yet. And we're still holding. looks like price wants to go higher. It's like it wants to break this. So that's good for us if it does. If it doesn't, well, it is what it is, right? So we're not in any shorts. There was no short opportunity. It was time 120. End of the madness. I think end of the madness is going to happen. Depending on the direction, we may. Oh, what's that? Is that on 140, 135, 140? What's 150 gonna do? Yeah, end of the month, we're probably just gonna. We may even find ourselves down here on the day. So if you're in this trade, get out right now. But if you still just hold this trade for and you're break even on this one because you're already up 20% on the day, no need to stress. So break even. See, end of the madness. It can happen in any direction. You know, like it's crazy. It's the craziest thing, man. You have to really manage your trade nicely because sometimes it may happen and you may be in profit, or sometimes that's why if end of day comes and price is trading around your price, just run away because you don't know where price is gonna go. You can I can kind of tell, oh, at 150 price probably go in the same direction as the 150 candle at 155, but 140, when that kind of happened, there was a low, there's rejection here, black candle, and then 145 candles like this, price would likely continue the 145 candle. But that's just you trying to, so best thing to manage your trade. So let's just say at the end of the day, best case scenario is we ended up with 20% on the day, and that's it. A good 20%, and that was it. 20% on the day, and all the other trades were just managed very well. That's all it was. Managed very well. Alright, let's go to Wednesday. Oh, there was no volume in. Wait, let me check that. 6:30. Volume did come in at 6:30 though, to be fair. Whatever. I think it was news. You know, let's have to drink water there. And you know, if you came in at 7:30, then well, what are you seeing? You're waiting for price to get down here regardless. So you probably be in at this candle versus us that were coming in at 7:55, and we're getting in at this candle. So either one works. Still pretty close to each other. Risk, well, at least 5 first of all. So at least 5. Well, already below everything. Might as well just risk below this. So 6. Nice rejection. That makes sense. Kind of saw that coming, to be fair. Oh, another thing we didn't do is where was volume on the day? If you're gonna count the 6:30 count, then you could say there was some bullish volume. That was basically the only bullish volume on the day. And then there was bearish here, bearish here. So by the time you came, there was. If you're counting this, then yeah, there's bullish volume and bearish volume on the day. If you're counting just this, then there was no bullish volume. So if it's just this, then I won't be getting in. But if we're counting 6:30, then yes, it's a trade. Because if there's no bullish volume on the day, then why do you think price is like you can't tell where price is gonna find the volume? You know, that's the idea. You don't want to. If there's no bullish volume and you want to take a reversal trade, you don't know where price is gonna reverse from. It's not like even the places that seem obvious for price to reverse from normally, because there's no bullish volume on the day, it's kind of you're waiting for the bullish volume to come in. You don't know where price really is going to reverse from. You don't know where price is going to find that bullish volume. So you want to wait for it coming, and once it comes in, everybody sees there's bullish volume. Now on a pullback, you can expect a reversal kind of thing. You can take trades expecting a reversal. That's what it is. So if there was no bullish volume on this day, I would not be getting in. However, if we had this, even though it's just the one candle, actually, if you look at the 1 hour on this, okay, it's fine. But yeah, even though it's just the one candle, we could take it there. So now, if Again, if we're going to say that we took this short, we took this long, then we're going to have to expect price to do something here, and we're looking for taking it long around here, right? So that aside, if we didn't take it, then well, there was really no short. I guess this candle was kind of shorty because there's not much bullish volume on that candle, and if you say, oh, there's all bearish volume on the day, then you could have taken that trade there, risking that high, at least 5, which is, man, I would just reached 7, right? So 7 looking for 14. But let's see how price interacts here. Hallelujah. Amen. 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 A to the man. Holy shit. If you are taking that short, you'll be a millionaire. The expectations of all young traders trying to be a millionaire in one trade, right? Come on, buddy. Like I said, so honestly, I don't think there was. I'd argue that because this candle, it depends. The reason why there's volume on 6:30 or not is there news at 6:30. So to be very fair, if there was news on this day at 6:30, I would say yes, there was bullish volume. So, and then I'll be looking trade at 7:30. I'm out here just waiting. I'll probably in on this candle here. Price forms this, pushes up, rejects. God forbid a hedge. Well, let's just call that a loss. But for you, I just hope there was no. I think there was. I think there was news. I think there was news on this day. I wonder what kind of news it was. Very weak. Didn't really. There wasn't much follow up on that news. It just came out. People just traded that news and dumped the stock or dumped price. Well, now what kind of news that would be? Like such weak news. Such weak news. It's almost as though the volume only came in for that candle, and after that, it just literally left immediately. Let me check something. So these are current. So these are current day. Let's go back to this day. There was no news on this day, so we didn't comment. So, but on Thursday there was news at 6:30. So coming to 6:30, look at the volume up here. Right. So coming to 6:30, we had 26k volume, 12k. See, this is consistent. This kind of like if you go back, you're in a 1k, 2k range. So between one and let's volume started coming towards 6:30, but prior to that, you're talking between 1 and 4k range. And then after 6:30, 26k, 12k, 32k, 4, like it was consistent. We didn't get less than 4k up until market opened. Once market opened, it's just day volume. So another day that there was volume, this day here, 6:30, 21k volume, 13, 9, 10, 7, consistent. Prior time again. So another day that there was volume, another day that there was news. What's it called? 64k, 33, 19. So these are good volume. So I will use this because if you compare this to this day here, on this particular candle, prior to that we're having less than 400 volume, right? Less than 400 volume. Well, 1.5, 1.2k, beautiful. Next candle though, straight back down to 600k, 600 volume, then 300, then 200, then literally back down to what it was. On this day, I would ignore this. I would ignore the 630 news. So I'm thinking. If this was the news, makes sense that it was news that caused that. Makes sense. I'd argue that there was probably news on this day. But there was no, the volume was not good enough to use that to trade on the day. To use that to start trading at 7:30. So we'd have to wait till this candle. And we come at this candle and realize that, oh shit, there is no bullish volume on the day. Ignoring that. We just act like it's not even there. So there's no bullish volume on the day, and so this would have probably been our short right there. Right. So that's what we're going to start doing. If there is volume, we'll have to ensure that there is consistency in the volume. a little bit of it. It may not be the most consistent, but at least consistency relative to that 6:30 volume. There's consistency from 6:30 till 7:30 relative to 6:30 volume. Otherwise, just assume there's no volume. All right. All right. So yeah. So if you took that, then assuming there's no volume, when on a day where there's no bullish volume, you kind of want to wait for volume to come in. But if it's your first trade, nothing wrong with taking your 20%. If you took that risking 8, take your 20% at 16, right? Nothing wrong with that. But if you held, good for you. 32 is your next TP target because 32 is 4 times. So you want to take it at 4R. But price could bounce from anywhere. So careful with that. But again, there's no volume, so you don't know where price will find volume. Price has broken this, that's good. So price may continue going down. But with this type of drops, a lot of times price does. Well, I guess there's this, and it's just 2 days ago, so it's not bad. Price could definitely find something there. But we're not going to try and take a reversal because there's still no volume on the day for bullish volume. So, so there's still no volume on the day. That's the thing. There's still no volume on the day. So price, don't try and be the guy to create the volume. You alone cannot create volume for the SPY market. Do you know how much is traded on a single day? You are nothing. You're absolutely nothing. All you can do is get your analysis done and trade if there is volume. If there's no volume in the direction you want to trade, then don't expect price to work for you. I don't know how to explain it, but just trade when there's volume in your direction. There's volume in the short direction, so just go short. Just focus on trying to go short. There's volume in the long direction, just focus on trying to go long. Don't try to create volume. You can't. Not until you have billions of dollars, you know. So like I said, 4R, you just get a 4R and you leave it alone because a lot of times it's just best to take that 4R because you may want more and it just didn't give you more, you know. So now volume has coming. This is volume right here. Now we can look for long around this area, around this week even. And then there is also this base that's formed. So if we get a short opportunity, nope, no short opportunity. So we're looking for a long opportunity. Looks like we're not going to get that, but we also have price come around. This is now a base basically. Drop, base, drop. So this is now a base. So once you have price interacts at this base here. Nice rejections. I want to see our price. So this has formed. Nice. This is forming. This is a low, right? So price came, it's holding kind of the low, but it broke the low already. So I want to see our price interacts here. That's where I'm more interested in. Still less than 11 o'clock. Price has been dropping from here, so you're also gonna watch that too. So, but honestly, at this point, I'll be like, price likely. You need to drop nicely, and then I'll watch it because these are short drops. So I don't like them. I'm much rather going long than. But this is very weak volume. This good volume is the short side right now. If we get a continuation, I may get in short. Nope, no continuation. So we just keep watching. And there you go, price going there. Like I said, the drops are short, so you don't this candle and then this rejection, very very good. You could have taken a trade there, this candle. I guess I didn't cut it out, but I don't like the low, but I like the volume that came in, rejecting the. So after this short, your only other trade would have been here. Well, this would have been forced, and because this is forced, you're using this low, using down here, but you want to just risk the low up there because you're still expecting price to come and retest this week at least, and so maybe even this week. So 16 is what you're gonna risk, and looking for 32. You know you probably not get it. You have very slim chance of getting that if you were risking. If you're more risky and you took it here, risking at least 10, then sure you may be able to get 20. 20 is just up here, right? So you may be able to get 20 because it's also under where you're expecting price to go to. And there you go, you get 20. But that's not what we're looking for. We're looking for price to get up here. And end of day, yeah, it's going to be going down. And that's the end right here. All right, 2 more days. 2 more days. I gotta go exercise and work out after this. All right, that's 6. No volume. 7. All right, that's 5 minutes. As you can see, there's a little bit of bullish volume on the day, but it's obviously there's bearish volume, right? But it's a tad bit bullish volume on the day. Not enough for me to take. Not enough. Compared to the bearish. Not enough for me to take reversals. So I have to wait. But there is some bullish volume. It is visible. It is visible. Although, yeah, just wait. I was going to say otherwise it's not a bad trade there, but just wait. Just wait. At least 5. So down here, which is beautiful. Man, I just read down here. Though. Where's the low? Oh, yeah, there is down there. 5.5 looking for 11. And you are looking for price to come back here for you to take a short, to be honest. So it's not bad. After this volume came in, this is not a bad idea here though. Using this low on that black candle, using this low here. Again at least 5. So if you might as well just reach down there. So 6. Right? And now price it didn't really drop much, so you don't want to use here. Just watch it. Rejection. Boom. Whatever. Nobody cares. But now you can see bullish volume has come in on the 8. So you can now take reversals. So you're looking for price to come to this area here, which it did on this candle here. If you're in long here, it's not a bad idea to add another long there. If you're in long here, there was no opportunity to go in short at any point here. So it's only been long so far. If you're in long here, there was even this long here too. This one here, but a lot of people will not take it because of the shape of the candle. I don't mind it. I've grown to not mind it, right? It would have been down, risking at least 5, so down would have been down there. 5.5. And for this one here, risking at least 5 would have been up here, around the same place. So if that's the case, might as well just risk down here 6 here. And even this one you're risking, I believe, was down here. So you didn't get stopped out, but after that, the next place of interest is down here. But yeah, let's see. Right now, we still haven't got any short opportunities, so we're still very bullish. I want to see how price interacts up here. Price is still very bearish. Lower highs. There you go. I want to see how price interacts down here now. Can't believe it wanted to do all of this and it didn't give us any bearish opportunities. Maybe you could have forced that hedge there, but damn. It didn't give us any bearish opportunities, didn't give us any, or we're waiting for price to get here. It didn't give us any bearish opportunities. Oh, I guess there was that drop. That was a nasty drop there. Ooh. That was a nasty drop there. Like, that's a type of drop. I don't mind waking up, or I don't mind being here at 7:45 and taking a trade. I'll probably be here. I always wake up early. But taking that trade, just risking that high, ultimate high up there, so 10 or 9, right? Taking that trade, because that was a nasty drop. So you can expect, if you risk that 10, you can expect 20s. I completely forgot to zoom out on this, but that was a very nice trade. If you took it there, and so given that that's the case, you could easily take this trade. And this trade here, you'd want to risk probably just as highs up there. Not just the high up there, but higher than that. That's your hedge. So up here, 8. Looking for 16. So if you took using that prior day, which I did not check for some reason, whatever. This was a trade there. Assuming you were in at 7:45. I am in at 7:45. I just don't. I just technically, unless their trades as good as this, even if price is down here, this is a very good trade for the upside, the bounce. Unless their trades as good as these, then I don't take any trades. I just wait for price to show me volume. And obviously, as price did show volume to the downside and then give you that candle, it's not a bad trade. And so here, maybe just because price rejected, maybe, and like I said, risking up there. So at least 10, you're 10 here, 10 here. On this one, if you're 10, you get 20 still. So there would have been these two trades, and then volume did come in here a little bit, so there definitely could be that long there. But given that that was what was happening, you would be hesitant to take this long here, because it was pretty close, right? That's why I was a little hesitant. But you would have more reason not to take this long. But it is a trade, but you'd have more reason not to take it long. You'd have more reasons to be more risky on your short entries, even though you would not necessarily take this on a normal day. But this is heavenly. This is like, take me to church, I worship like a dog. Da, 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 da. That's what this is like. Yeah. So basically. All right. So these are the entries so far. Those were the entries. There's only two losses, so 20% loss and then a 40% gain. Given that this one was pretty up there, you'd probably want to take this one first and then leave this one. Just because what's it called? Taking this one to break even on a day, basically, and then leaving this one to, because you want to see how price interacts here. After this kind of closes, ooh, how nice. After this kind of closes, you're still not have taken profit on this. So you might as well just remove your take profit and watch. Beautiful. Ugly. More ugly. Beautiful. Beautiful. Ugly. Alright, so you're looking for 4R, right? So you're risking 10, looking for 40 basically. Keep your stop loss at 20 at this point. Keep your stop loss at 20 because you never know. And you get stopped out. And that's fine because there is some bullish volume on the day, right? I remember, want to see how price interacts here. Price may find volume earlier than the wick, which it's looking like it has. So keep watching. End of day approaching. This is 1 o'clock. Yeah, so it looked like price found volume earlier than the wick, which, like I said, it found volume at this wick. Once this happened and then this black candle, if you're in that trade, you could have hedged at this black candle here. That particular black candle that came to retest the wick and rejected, you could have hedged there. But if you took that hedge, obviously, like I don't need to say it, the risk is down there. So that's 15, right? 15, you're risking 15. So you obviously are not going to get 15. But if you close, you get 40% on those two shorts, lose 20% on the longs. Or let's say you only lost 20% on your longs on a day because, well, you did not zoom out and you forgot about this. And if that was the case, you would go through that day, and when the moment you zoom out, oh my God! And yeah, as you just literally be in shock and you'll be disgusted that you never zoomed out on the day and you just missed some glorious shorts. But that's why when I come in at 7:30, or actually I come in at 7. And now if there's no news, I wake up at 7:45. Oh no, I wake up at 7:30, and then I just get here at like 7:45 ish. Yeah, that's what happened. But if there's news, I wake up at 7:15 and I get here at 7:30, or I get to my desk at 7:30. So when I get here at 7:45, I see and then I zoom out. Oh shit! I'll just rush and I'll take a shot. I don't need too many things. It's right there. Everything is aligned. If you drew a line, it literally already touched the line. Like, what more do you want? What more do you want? Your line will be here. What more do you want than that? Come on. get in short, take the risk, or just forget about trading. All right, so we have that. So if you didn't take the shorts, like I said, it will be a 20% loss on this day, on this trade, and then you wait, you take this long, because I don't see why you're not taking this long. You waited for price to get down here, like I said. So we had a big bounce. You can expect some kind of bounce. It may have only been this bounce, right? And then price will continue going down. But on the way back down, it gave us some signs that I wanted to continue, right? So, and then there was this low. So you could maybe, after price did this, knowing that price continued going down, you could, after price pulled back down, you see this low, okay, you could put your stop here. Your stop from 15, now you're only risking 5%. So maybe on a day you lose 25%. Maybe on a day you lose 25%, right? Or if you're a little bit more scared, oh, you lost 20% on a day, and then you break even, right? So you're down 20%. You're down 20% on a day, and then this happens, and you're kicking yourself in the shins. You're like, well, that's what you get for being a wimp, you know? If you're going to risking 10% of your account per trade, that's because you're probably broke. If you had 100 grand, you're a fool for risking 10% of your account. Actually, calm down. That's probably going to be me in a couple of months. So I'm not a fool. I'm just the guy who wants to have $1 million. That's all it is. Please do not insult my intelligence. Okay, if you had 100 grand in your account, there is no reason why you should be risking 10% per trade. You get what I'm saying? If I can say that out loud, maybe I should not risk 10% when I get to 100 grand. Well, it's going to be slow if I don't reach 10%. It's going to be slow to get to milli. It's going to be slower. Like if you had 100 grand, 1% is fine per day. Per trade, actually. You're asking 1% per trade? That's so cheap. It's like, it's cheap. It's so cheap. It's so cheap. Oh my god. 1%? As a great trader, what's his name? Shit, it just came to my mind. Oh my god, I need to get his name. Like, it's a trader I really respect. It's an old trader. What's his name? Oh my god. It's literally at the tip of my tongue. I forget his name. Damn. Reminiscence of a stock operator. Jesse Livermore. That's the name. That is the name. The book about him was called Reminiscence of a Stock Operator. It was a book by Edwin Lefevre. Edwin something. Last name is Lefevre. And Reminiscence of a Stock Operator. Jesse Livermore. He once said, if a trader, this is not verbatim, this is not word for word what he said. Well, basically what he was saying is, how can you call yourself a trader if you have a conviction? Hey yo Jeff, how you doing, bro? If you have a conviction of a direction and you have 100 grand in the bank, and then you're only risking $10,000. Jesse once said that. He said, you're only risking 10%. He said he's the trader that would have, I'll risk it all in that trade, basically. And Jesse, I think he was the richest. I think he made the most money off of the stock market that I know of as a retail trader. He did trade within some firms, but for the most part, he uses money. And obviously, it's the same Jesse that eventually does say risk management. So don't take it word for word. I just liked the fact that the guy was willing to. There's another one. Or there's another. Which one? I just like the fact. I just like when he said it. When I read it, he was like, "Oh, You can't. You have to be so sure in your conviction that you're willing to risk it all, basically. So I honestly, after hearing those words, I've always felt weird. I even felt weird before that, but I've always been feeling weird about just having 1%. If you say man risking 1%, bro, what? Like what? 1%? No, no, 1%. What is that? What is that? Am I being stingy with my money? What's this? Nah, nah. But also, Jesse eventually says risk management. So don't just take what I'm saying here. It's just sometimes in life, some people can just be crazy. There's a period of craziness, you know. Chris Jan Kulamag, interesting. He made a lot of money, trading the stock market. Did he corner the? Did he corner the? Was it? I think it was the corn or no, either wheat or soy was the market that Jesse literally controlled at one point. 88 million, bruh, bruh. Jesse made hundreds of millions as a trader in his time, and this was back then when the dollar, like back then when the dollar meant a lot. Hundreds of millions as a trader, hundreds. He made hundreds of millions as a trader. I can't remember the length of Jesse's career though. Even this guy BNF, this Asian trader, he's also made. I think it's a lot of money. I can't remember. I keep seeing it on my YouTube home, but it's a lot of money. But yeah, so it would. I don't know. When I'm at 100 grand, it'll probably be. I don't know. We'll see then. Maybe 10%, maybe 5%. But yeah, so if you took this trade, let's say you're down 20% here. You took this trade, should have been up. If you held this trade, then you would have made back probably 10%. So you'll be down 10% a day. If you took these trades, then you'll be, because of this, you'll be good on the day regardless. So what happened to me? YouTube banned the, no, they put a strike on my account. I think it was for the Netflix. And I think I already had a strike before, probably for something else. I don't even know what it was, honestly. And I think YouTube has been deleting some of my videos, so there will be one or two videos missing, or a couple of videos missing from my channel. But so I think I had a strike before, and so this was my second strike. So my second strike is technically my first strike that will have a punishment, and so the punishment was a week of not being able to upload or stream. So I recorded all my week last week, even the back testing and the live trading. I recorded it all, and I posted them all. I think yesterday or the day before. So they are all on my channel right now, but they are uploaded as videos. They're not live. But and so now we're back basically. But during that time, during last week, I ended up going up to 100 and something. So let's say 100. So we went up to like again less than 1,000, and now again we're back down in the account. The last point on the account was like $385, something like that. So basically $400. So we're still at $400 on that stupid account. But during that time, I also thought about making taking trades. Just the way I'm trading. I thought about this strategy. This strategy that I've been backtesting with. I thought about this strategy, hedging basically. Basically hedging. And hedging in such a way that whenever you close, if you did hedge, then you would make 10%. Okay, because you're risking 10% per trade, so you would make whatever you risk on the hedge if both if both trades are closed. So that was the idea. And so to really enjoy this trading style, I'm going to have to pause that 400 to 1 mil. And I'm going to start trading with my 2K account basically. Uh, um, oh yeah, another reason that gave me is because I started that challenge, a challenge that 100K account funded challenge, and I was trading with them. I got my brother into trading too, so he's trading one of their accounts. He's basically the one going to be doing the funded account. He just started trading. But anyways, what that's local. But anyways, when I I was trading the 400 to 1 mil account, and I was also trading the 100K challenge account. And then I was risking 1% on the 100K challenge account, and I was saying like, damn, 1% is a lot depending on your account size. Man, so like, damn, interesting. But again, the challenge accounts, like I predicted, came with a lot of restrictions. Lots of restrictions. The spread is disgusting. I don't know. It's just it's a sad account for me, and I just don't think I'm going to keep trading on that funded account. My brother will probably carry on. So when I saw that 1% thing on that account, I'm like, damn. And I've always known that risking 25% per trade is nerve wracking, yo. Like I'm afraid of when I get to 10K, and because it's supposed to keep going, you know. As a broke guy, it's nerve wracking risking 25% per trade. At $400, it's not that nerve wracking. Once it gets to 1,000, you're like, I'm risking $250 on this trade, bro. Damn. So that's why I'm like, okay, I'm gonna unfortunately pause the 400 to 1 mil, and then I'll just trade this strategy, and I'll just grow my account risking 10% per trade. Because 10% per trade, even though I'm risking 10% of 100 grand, I don't know, it doesn't phase me like that. It doesn't phase me like that. So risking 10% per trade, and then grow the 2K account. It's not 2K, it's about 1.9. Grow the 2K account, or 1.8, I think. Grow the 2K account to wherever it grows to, ideally 1 mil. And maybe I'll come back. But if I do that, if I can grow the 2K account to the 1 mil, I don't think I'll do the 400 to 1 mil. It's never happening. But I'm not denying that it's possible. You just have to have a stronger nerve, being able to risk 25% of your account in one trade, and not being, because another thing too is doing that restricted me from hedging. One, two, it restricted me from, I don't know, trading freely, because once you have 25% risking on one trade, there's a limit to how many trades you can open. You know what I'm saying? So that was what was so like in this case now, if I'm in 10%, I can add 10%. Now I'm risking 20% on the trade, but at the very least, it's, I don't know, it's just. But if I was going to trade 25%, I'd have to enter 25%. Let's say it was this here, I'd have to enter 25% here, risking down there. And when price came down here, I can't in my right mind add to 25% risk. Like that would be risking probably another 10%, maybe. If it's another 25%, that's a whole 50% I'm just risking on that trade right there. But 10%, 10%, that's 25. That's 20%, right? That I can handle. And it's not all the time where I get in and I get in lower. Like it's a lot more. I get in and price goes in my favor, or price stops me out. So, but yeah. So from tomorrow, I will be trading the 2K account, and you'll be seeing this strategy. I, Yeah. All right. Well, that's it, Jeff. That's the current status of things. Is 120, 130. Probably like I said, want to get out of that trade in 1 hour. 155 there. There you go. All right. So we'll go to the next day. 4, 5, 6. That's not volume. So 7. Coming in on the day. There is not much bullish volume on the day. Sorry, bearish volume on the day. Not much bearish volume at all. So we decided to take this trade. Oh, you could just raise down here. 20. So I'll do that. I will do that. Interesting though. Let me see prior day. Let's not be like we didn't see prior day. Alright, prior day. That is drop here. Price is around that area right now. It's already dropped from that area. It's already dropped. So I think it's a fine trade. We're risking down here. And if price comes down to stop us out here, well, there's a long that we can take here. Volume is coming into the short side on the day, but we're still waiting for price to come to this area before we go into another long. So that's a good continuation setup right there. Though, like again, the reason why we took that trade, there was no bearish volume on the day, so we came in at 755. We saw there was no bearish volume. We jumped in and we checked the range. It was about 10 or whatever. We just reached down here, right? So we reached down here and price does come stop us out. Like I said, price will likely give us a long opportunity, and given that there's volume on the day, we are free to take a long reversal, but not yet to the short side. If price came all the way down here, then there will be short volume on the day. So when price came back up, we would want to take a short trade. Anyway, so right now we're in risking about 20, I believe it was 17. I guess it was 18. So looking for 1 hour ideally, but honestly, if volume starts coming to the downside, then we'll look to hedge versus getting out 10%. So it's really interesting here. Also looking to add to our long. So if a low has formed here, bounced off, pulls back down here, bounced off. So this low is kind of more it's been tested and certified basically. So the risk will be down here, this blue candle. No entry. As it broke the low, so I don't know, it's not low enough for me to want to get in. It's not low enough in this. I know we can bounce at any point in this whole area, but it's not low enough. Mm. All right, whatever. How was my break? What break? What break are you talking about, bro? All right, I'll take a hedge here. Risking at least 5. So we just risk above that high there. So wow, we just risk 6. Looking for 12. Break even on this long. We didn't quite break even on the long yet. This is what, 12 o'clock. Interesting. That was what, 1305. Not pull back up. Not a bad idea to get out, given that this bounce is happening. Or whatever. If you didn't get out of this short that you're risking 6 on, risking 10%, so your 10% is up here. So you get stopped out, right? And for this one that you're risking, what's it called, 18, then you would get 18, and you would get, so you're break even on the day regardless. Otherwise, what's it called, if you got out of this break even here when price was looking like it wanted to continue, I pressed that play by mistake, by the way. It wasn't like I meant to. When price was looking like it wanted to continue, 18, so you'll be looking for 20, 17 looking for 34, right? 18 looking for 36, I guess. So you're looking for 36, 755, you close your trade right there at 24. So you make about 12 or between 12 to 15% on the trade and break even on this one. Or you make about break even on the day, whatever. Jeff, what break are you talking about, sir?
Huh.
$31.30 here. Oh, alright. I will be closing the stream here. That's it for the day. That is it for the day.